we do a quick introduction. We don't have a ton of time, but let's do quick introductions, then dive deep into investing in ICOs, investing in the industry, the difference between equities and equity in a company and tokens in a company. We'll start with a good friend, Eddie Travia.
Hi, thank you. Eddie Travia, CEO of Coincilium, investing in this space since 2013. Initially out of Hong Kong, moved to London, now listed on a stock exchange in London, invested in 17 companies. More recently, CoinDash Indoors, so companies who have done ICOs, but we invest in equity. So for us, an interesting way to invest and to see how ICOs are doing as well. An advisor on a few ICOs. Some of those ICOs are here.
Hey everyone, my name is Nico. I'm a partner at a firm called Lakestar. Generalist VC have done things like Spotify, Facebook, Airbnb in the past. I run our blockchain activities, sit on the board of a company called Shapeshift, and we've led the Series B into blockchain.info, the world's most popular Bitcoin wallet. And I feel like I'm a traditionalist here. We own actual equity in these companies, right? So before many of your time, corporations were set up in equity forms. But we look very closely at ICOs. We'll talk about that in a second.
Hello, hi everyone. My name is Ara Ezra. I'm a founder of blockchain.my wallet, or you can call it BCMY. And also a CTO of Dinar Dirham, Ethereum gold-backed token that we created 2 years ago. Okay, you.
My name is Richard Titus. I'm a serial entrepreneur and angel investor. I have a portfolio of about 100 companies. I started doing crypto investing about 1.5 years ago, so I'm relatively recently arrived to the space. Thanks to Michael, and I can't decide whether equity or coins is the best tool right now.
Hi, I'm Michael Turpin. I wear 3 hats in the industry, really for my career. Entrepreneur, probably best known for starting MarketWire, which is now owned by NASDAQ, and a couple of PR firms. Marketer, I run Transform Group, which is the oldest and largest PR firm with some other divisions. In the crypto space, we've done, it'll be 50 ICOs this quarter, by the end of the quarter. As an investor, I started BitAngels, a Bitcoin syndicate on AngelList, the first crypto fund in 2014, BitAngels Fund, and I'm now a partner at Alphabet Fund.
Thank you. Oh, okay. I got my own. Hi everyone, Adam Cleary. I'm a partner at Novasset. Novasset is a company that is structuring and advising ICOs. We are focused on securities tokens. We have a regulated entity in the UK. So we are going down that route and focus more on that. Currently, our mandate, one of our mandates is Spice Venture Capital Fund, which is a security token as a fund. And I think that security tokens will be a much bigger part of the ICO industry going forward.
Hi, I'm Pamir Gilenbi. So I started investing in the space in 2012, and I've been really passionate about the space since then. So I invested both in equity and in tokens. Bitcoin was my first investment. My first company investment was Kraken, where I'm a board member, so I led the Series A in Kraken back in 2013. I'm actually just curious, who here is a user of Kraken? Can you raise your hand? Yeah. Cool. One of my more recent investments is a company called Ledger Wallet. May I actually ask who here uses Ledger Wallet? Okay, so we need a few more hands. Hopefully next year it'll be everyone. Ledger Wallet is probably one of the best ways to secure tokens in this space. I'm also a small investor in Shapeshift, and I also invested in a company here in London called Crypto Facilities, which is the first regulated derivatives exchange for crypto assets in Europe. And they went down the route of getting full regulation so they can basically trade anything. And I've also been investing in a dozen protocol tokens over the last, I guess, 2 years. And I guess we'll be talking about that as well.
Yeah, and one more thing about Pamir. We stand on the shoulder of giants, and if it wasn't for Pamir's Coin Summit, this would never have happened. He built a community in London. I'm just riding on your coattails. So let's talk about investing. We covered a little bit about tokens versus equity. Let's talk about what we're looking in, best practices to look into companies that are doing an ICO, or that have a company. Maybe let's do this round on ICOs. What are we looking for in them, and maybe as it relates to regulation or the team or what they're trying to build, or whether it's a protocol or a dApp. What are your thoughts?
Well, it's a vast topic, obviously. I mean, to see the great attendance here, it shows that there is an interest overall. I usually run a little presentation where I talk about the facts, fiction, and the future of ICOs. And I also look at the risks and look at the advantages. Obviously, we all know here that token is a non-dilutive way to raise funds, so it's very attractive to everyone. My little thought of the day would be that we're all a little bit taken in this. You know, it's like there is a dynamic here. The dynamic is that back in 2016, but of course before, Michael Turpin knows, in 2013 there was one ICO, you know, Mastercoin, for example, and then Ethereum, 2014. But in 2016 with First Blood, and then Golem, and then, you know, Brave, and many successful ICOs. There is a dynamic here. There are a lot of entrepreneurs who realize that issuing tokens has become a very interesting way to raise funds. And of course, among the things we look at is not only the team and what we all look at as an investors, but it's also if the token makes sense, because in the current regulatory environment, you cannot issue a token which is representing yet a kind of a share of profit, revenue, etc. So that's one of the big issues. So we look at the legal risk, we look at the tax risks. We work a lot with Gibraltar these days because we feel that they're leading the way for a regulatory framework, and that's great. So standard startup due diligence plus a layer of token utility, a layer of different new risks that are coming up in this space. But in a way, our experience for the last 4 years really helps us in this work today.
Okay, I think I love what's going on. There's a lot of talk around VCs being completely disrupted by token economics. And believe me, we don't enjoy negotiating an 80-page shareholders agreement and then spending hours and hours at lawyers in putting that into reality. So a token is such a cool way of establishing ownership, participation, call it what you want, in a cool venture. However, it's not a shortcut to business building, right? How do you design an organization? How do you incentivize the team? How do you translate a token into a real-world use case? How do I do hiring and all that good stuff that we spend a lot of time working on? And just because there's a token, I always enjoy abstracting from it, right? So who's the team? Can we back them? Do they like us back, right? There's a lot of douchebags in investor land, so be mindful. And when stars align, if the team happens to be raising a token, I'm all for it, right? It's awesome. But the business building as such is something that I encourage a lot of teams to think about. And it feels to me that some of them would have benefited raising 1 million instead of 200. It keeps them a little bit disciplined.
Okay, it's going to be an exciting years because I'm from Malaysia, and maybe you have heard that China is already banning the ICO, because why? There's a lots of ICO pop up in China. You can see that every week there's 2 or 3 ICO coming, and there's no foundation and no strong products. So when you want to participate in ICO, you need to see a potential for a few years. What's going to happen in ICO, and not only that, you need to see the foundation of the technology itself, how it's going to benefit people, how it's going to give solution to every problem in the market currently. So what's happened is in China, especially in Southeast Asia, there's going to be lots of exciting new products. There's going to be lots of innovation coming into the market. And actually we are heading to a new path. Never ever been in history we have facing similar like this before, okay?
So I always look at things, I'm a surfer, so I look at everything like surfing. So there's always another wave, and you always want to balance it. You want to balance your approach to the market by thinking about waves and surfing. And so I've lived through 3 or 4 of these big waves. Michael and I actually became friends in the first one. And so when I look at this space, I think, okay, what's common? Well, great entrepreneurs with great ideas using a new technology that fundamentally changes some rule in the ecosystem. Yes, that's true. What's different? Well, geography doesn't matter anymore. Capital can be raised very efficiently in a democratized fashion versus whether you went to Stanford or Yale or Harvard. And the third thing I think is most interesting is that many of the rules around how investors can get their capital back are changing. And I think that's the part that we up here on the stage struggle with, because as quickly as the companies are innovating, we're trying to figure out how to do that relationship of capital for value received. And I think we're driving the car down the highway while rebuilding the engine at the same time. So it's an exciting time, it's a dangerous time, and I have never had so much fun as I'm having right now.
So I'd agree with Richard about all the fundamentals apply and none of the fundamentals apply. So when you're looking at, when I'm looking at an investment, I look at the exact same things that I would in terms of the makeup of a team. You know, are they competent in this area? Are they bright? Are they honest? That's a huge one, especially when you're, you know, picking a team that's like half the world away sometimes. Do they have the ability to go and attract good advisors? Do they have the ability to, you know, to develop a prototype and not just a kind of sloppy white paper? But then none of them apply in the fact that, you know, you can't have a board seat. But I'd say the one thing you'd be adding to it is crypto economics, because the crypto economics of two similar teams can be radically different. I mean, there's several tokens out there that have been in the infrastructure side. Some have gone up 100x. Some of them, you know, we work with NEM, we work with EOS. I mean, there's some that have like just, you know, skyrocketed. Other ones that are poised to skyrocket. You know, other ones that have like never done anything, and a lot of it had to do with the crypto economics. Same thing with storage, right? We worked with Storage the Coin. We worked with Golem. We worked with MadeSafe. You know, and the crypto economics. I mean, MadeSafe still hasn't released a product, and yet there's still, because of the way that they are going to work when they do, there's still faith in that token to have it still 50 times the original crowd sale.
Thanks. I mean, I think the remarkable thing I find about investing in tokens, trying to circle back to the question, is the way in which the tokens that everyone loves sort of sell themselves, and the team, you know, just does it, and everyone gets it instantly, and everyone says, yes, we have to be in this, you know, 0x, Aragon, etc. And those are the tokens that really grab people's imagination, the sort of builders of fantastic new things. And I think a lot of other tokens, for some reason, don't fulfill that requirement and need to be pushed and sold. And obviously, that is natural and that is right. But I think it's notable that is the way in which most very successful utility tokens work. And I think for everything else, we have to look at a model of having securities and security tokens and having a framework for doing this. So that would be my contribution.
Okay, so the question was best practice, right? Since I'm at the end of the panel, I want to make sure I'm answering the right question.
The questions are like an ink blot test. Whatever you see in it, you know?
I mean, on my end, I'm still very much learning about this space. So, and I think it's probably incorrect to apply the same heuristics one applies in the early stage, you know, venture capital business to this space. I agree that a lot of things that apply in venture capital apply here as well. So you know, look at strength of the team. You look at how well they work together. Have they worked together for a long time? You looked at definitely, you know, things like integrity, which are obvious basic things that you need to have. But beyond that, I think, you know, we're in an environment right now where there's a lot of easy money. It's an environment where, you know, pigs have grown wings and are able to fly. I'm not saying everyone is a pig. I'm just saying there are a few of those out there. And we're in an environment where people are flipping tokens very quickly. So, which is the case in every financial speculative bubble, right? So people think, oh, I can get in this price, and then tomorrow I can flip it for double the price. So in those types of environments, it's easier to raise money because people think, you know, they can make money quickly. I think on my end, what I'm really looking for is decentralized systems that have or will have sooner rather than later real utility. Beyond their speculative value. I agree that the crypto economics are a really important component of that. But ultimately, I really look at, you know, is this thing going to be useful? Is it going to be useful soon? And who is it going to be useful for? And hopefully for a lot of people. I think there are early examples of projects where we are seeing real use cases. One of them that actually I hadn't tracked for a long time, and I'm sure many people in the audience are way more aware of this than I am, but is a project called Wings, for example. So Wings, is very effective in being able to predict certain outcomes in the ICO space, for example. That's an interesting use case. So I don't know how big that use case will be, especially if there's a downturn eventually. But I'm interested in things where people are really using the token other than just speculating.
We're going to do this again. We got two more types of question to run through, and maybe we can follow up on that one, which is what types of tokens? So you sort of have the security tokens, and you have the anonymity tokens, and you have the exchange tokens, and you've got the cannabis tokens, and you've got certain sort of utility tokens versus protocol tokens versus a basket. In choosing in what to invest, and maybe good for the audience as well, who are participating in tokens. Now it's not exclusive to VCs. What are your takes on having a basket of different types of tokens, or only protocol tokens, or is there some method to your investment strategy?
So before going to the different types of tokens, we focus, and I agree with Pamir's what Pamir was saying just now, is that we invest in long term. So we invest in equity and we get tokens because it happens that the companies we have invested in are doing ICOs. Sometimes we know it, sometimes we learn it a bit later. So it's not necessarily the reason why we invest. We invest in companies where we believe the product they're building, the service they're building is useful. And we also see that, again, someone who buys tokens for speculative use is not going to be as helpful as someone who buys on the long term and wants to help a company and advise them. So there is a whole advisory guidance to VC investing, which means that you cannot say today, well, VC are gone because I'm going to sell tokens, right? So there are different functions for different roles in a company. And now we even see people coming to us after an ICO. So people raise a lot of money and then they say, well, maybe we still need some advice and some guidance. So to come back on the tokens, we are not, in the same way that we actually started investing in this space a bit blockchain agnostic, we're also kind of token agnostic. So we're not really worried if the company is doing protocol or certain type of platform, or if they're doing a token for a very specific decentralized application. We invested, for example, in Indoors because we like the idea of a social media platform that is going to validate claims through incentivizing people to use it. So because we all know that in the social media world, nobody's really making money apart from the owners of the network, and the users certainly are not the owners of the network right now. So that's something we like on the long term. I don't think you're going to move out LinkedIn next year. It's going to take some work. So again, more of a long-term relationship here. We started moving after transactional, we started investing in wallets, exchanges, and payment processes like everyone who started in 2013. And then we moved to platforms. So we invested in RSK, smart contract platform validated by Bitcoin, and that's also a very long-term play for us. We see a lot of applications can be built on it. So in that sense, we really like the idea of a platform and then giving birth to a lot of applications companies that will build on it. So this type of tokens will be of interest because there will be a connection between what we invested first, like a platform, and the next generation of tokens.
I guess to me it boils down to being able to develop a fundamental view of what's for sale. And we all talked about team a little bit, we talked about business economics or crypto economics, but it also involves things around quality of code, right? GitHub commits, these type of signals that we look for. Platforms, yes, of course we love platforms, but the big question is, how do you spot a token that has the potential of becoming the next Ethereum? Right, and you're going to have to think not about speculation, which we're a little bit in right now, but you're going to have to think about real-world use cases going forward. So something like an IOTA, where it's very much about the Internet of Things world. But of course, that's super hard trying to predict, right? So I have a vertical use case, stay with Internet of Things. Who is going to be the winning protocol in that segment? And again, it translates back to teams and their ability to build a business around it and then rally contributors onto the protocol around them. And so very fundamental viewpoint that we've taken. And yeah, have we missed out as a result on some of the run-ups that are speculatively driven? Of course, right? But maybe I set up a separate hedge fund vehicle to kind of benefit from that.
Okay, there's going to be a lot of innovative tokens. It will be coming for a few months from now, maybe a few years from now. There's lots of innovation going into the market and seen in the industry. So what happened in the current market? People tend to buy token because why? Because they tend to receive some income or some capital. Because everyone needs capital. Everybody needs capital to do business. Everybody needs capital to do things. So what happened now? Actually, we are facing into new wave of capital market capitalization on modern history. So I think there's going to be lots of exciting tokens coming out. We didn't even know. Maybe there's another Ethereum coming soon. So there's lots of innovation coming out because this is open source. Anything can be. Everyone can create something from that.
So I like to describe myself as token agnostic because every time I think I've created a system for evaluating the economic design around tokens, somebody comes and presents me something that's not in my system and I like it and I make an investment. So I've just given up on having rules around token design. But to repeat, the things I look for the most are people don't win, ideas don't win, teams win. So I look at the team, and I look at the team in person. I look at their work on GitHub. I check them out through my network. I look at the idea, and I always ask the question, and I would ask this of us too as investors, why now? Why is this happening right now? What are the macro conditions in the market that are making all of you show up for this event and get excited about this and companies starting? And is this company special for now, or could you have started this company anytime in the last 10 years? And the third thing I look at is how are me and my limited investors going to get a return on capital? Are we going to be riding a wave of success and hype? Are we going to be getting an equity stake back in a business? Or are we going to get some sort of derivative or some sort of annuity income from this? And the interesting thing about tokenization is all the rules are out the window. You can design anything. As an investor, you have to look at things completely differently. You need an entire team of people with all these different backgrounds that you didn't need when it was just you betting on a team and a 7-year return on capital.
Yeah.
So infrastructure tokens have been the biggest winners. The first one, Bitcoin, clearly infrastructure. If you look at the top 10, they're about half infrastructure. And the returns have been fabulous. I mean, my firm launched Ethereum in January 2014. And initially, it was just sort of like, okay, here's a 19-year-old kid with a white paper. This is kind of interesting. And that grew. And the community got involved, and people started reading it, and it drew more people. And by the time the ICO happened, before they even called them ICOs, that summer, it raised an unprecedented 18 million, which is now considered like, you couldn't have done any better. But investing 30 cents at the time in one Ether, is a 1,000x, not 1,000% return today if you held on to it. It was actually $400 early this year. So the gains of NEM, of NEO, have been spectacular. I mean, 100x plus. So that's, I think, the most important thing. And right now, most people believe that, we're not at the phase where all innovation in platforms has been created. So if you see a new platform that you believe in, put something in it. The next wave, I think, that's been very popular has been, app coins, but app coins around large markets, right? I mean, Ann Winblad, who was my VC for MarketWire, one of my top backers, used to have a saying, look for markets the size of Texas, right? Storage is the size of Texas. It's the size of Africa. So, that's a huge market, which is why Filecoin has raised so much, why some of these other ones have. And I think there's some markets that haven't even hit yet or have hit only a small way. The entertainment market, the content market, the real estate market, the medical market. I mean, these are all, if you can see a first mover that has traction, not a first mover, the first mover with traction. The first mover in social networks was 6 degrees in the 1990s, no traction. Rise, limited traction. MySpace, Facebook had traction. So there's still going to be a Facebook in all those industries, and I'm looking for them.
Before you continue, I think instead of going one after another, and we'll start with you guys. Let's start chiming in and having a more casual conversation. Okay, cool. Just let's keep it. We got another 15 minutes on the clock, so let's keep it going. Sure. Chime in whenever. Don't be afraid to use your mic or steal the person next to you.
That's okay. I think, well, one of the problems with investment strategy in relation to tokens is that I'd like everything to be a token because I think it's a fantastic and superior way of asset ownership. But as Michael sort of alluded to, it's all relative and it all keeps changing all the time. So there is no safe harbor to go back to. There is no touchstone, nothing you can go back to preserve your wealth and ownership. You just have to keep rolling forward every day, all the time, and it's always changing. And I know that people use Bitcoin in the crypto space as sort of the touchstone that you return to, the store of value, if you like. And that's worked well, but even Bitcoin itself, you know, there are 10 things trying to disrupt it effectively. So it's very hard to run a portfolio strategy around tokens without a touchstone, without a store of value, without an asset-backed something, some physicality, some link to the real world, something that, you know, is not destined to change constantly and to constantly be challenged. And that's the hardest thing I find about tokens. So the way I resolve it is to try investing in new things, as Michael suggested so aptly, to keep bets pretty small. And obviously, hopefully, I will be in the next Ethereum. But that has to be your goal. And there will be very, very few of those. So you have to really spread your bets in a way that I think traditional portfolio strategy, you wouldn't.
I mean, there may not be another Ethereum. We'll see. But so far, my strategy has been very narrowly focused on protocol tokens that don't touch the real world. So I've purposely avoided any type of token where there's some sort of company that needs to be there forever for the token to actually have any kind of value. So we've seen some utility tokens issued by actually great companies like Binance, for example, the exchange that launched recently. I mean, I love Binance, I love its founder, but I'm just not that excited about those types of utility tokens. I'm a lot more excited about pure protocols that exist, that can exist without, you know, the original team still developing them potentially. So with regards to security tokens, I've also avoided those, not because, I mean, I agree with Adam. I think that ultimately, probably every asset is going to get tokenized one way or another. But, you know, when you think about security tokens at the moment, it's much less disruptive, much less exciting than a pure protocol token that I think can solve a much, much bigger problem. B, a lot of people who are raising money for security tokens are doing so because right now, let's face it, it's kind of relatively easy to raise money with tokens, and that's the primary driver for creating a security token. Yeah, sure, security tokens have some advantages. You can piggyback on the exchange infrastructure that's out there. You can, you know, you can piggyback on the wallet infrastructure, so people can use wallets to store them and so on. But at the end of the day, it's not massively innovative or disruptive, I think. So that's why I've really kept to what I think is really innovative, really disruptive, really exciting about this space, which is these pure decentralized protocols that do not touch the real world.
All right, let's talk information. Anybody chime in whenever. Let's talk about who gets what information when, at what time. Because it seems like there's an imbalance. Some people get it from CoinDesk, some people get it from Crypto Compare, some people get it because they're friends with the CEOs. What's happening here? Who knows what when?
Well, this is a at this point, which we may fondly look back on in a couple of years, this is a completely unregulated market for non-securities. Today's headline in CoinDesk and elsewhere was the SEC now has a task force that is going to look into abuses of ICOs and other DLTs. So this means new regulation, not enforcement of current. What happened in July that scared everybody was no new regulation. It was simply saying the DAO is a security.
But it's the regulation on information. On the information sharing, right?
I think that will happen because right now you're in the same category as fine wine, art, and gold. And in many ways, an argument could be made that we're all insiders, and right now we can go and trade on inside information because it's not a security, it's a piece of software. We'll see if that happens. And then everyone will leave the United States and move here.
That's absolutely right.
Bear in mind, VC investing or that type of investing in general, that's an insider's game. It's who do you know? What are they up to? Can you invest early? So to some of you in the audience who are thinking of investing in tokens or already have, if there's many tiers in these ICOs and you're not in the very first, that's an insider's game and you're not the insider. So be mindful of that.
I think one thing that we're starting to just begin to see now is the token offering is not just about new companies with a white paper and idea. We're starting to see some existing businesses using this economics to raise money. And I think that's actually really interesting because those companies also in the past there was no transparency information. So I think we have a lot of work to do on the infrastructure for communicating data about our investments, about communicating use of proceeds, about communicating progress. One of the things that makes me unique as an advisor, and some of my portfolio companies are here, is I don't bail after the ICO and never call you again. I come by and visit you in Bulgaria and ask you hard questions. And some people don't like that, some people love it. But it's a really important thing as investors. We have to start to think about markets and companies as long-term investments with short-term potential for return of capital, which is upside down from the way we've done business for the last 100 years.
And they're almost eternal investments in the fact that, you know, I've said a couple of times that, you know, everybody's saying, when's the dot-com crash going to be for the ICO market? There won't be one because the reason why you had a 99% downturn from the $5 trillion market and only the Amazons and eBays barely survived and were bargain priced back then, $3 or something, was that boards could come in and shut the company down. If Ethereum was a private company after the DAO, they probably would have been shut down and you wouldn't have the Ethereum of today. You can't shut down blockchains unless somebody actually literally shuts down the server. And that's only happened once that I'm aware of. So even though big money will roll in and will pull back en masse, it's not going to shut the companies down. A good example is Syscoin. Syscoin had their ICO proceeds exit scammed by one of the founding investors, and they were gone. And then they just bootstrapped, didn't take any salaries, and came back, and they're now a higher price than they've ever been because they actually delivered on their product.
It's actually ironic in a way when you think about it that a lot of people are drawn to this new world of blockchain because it's decentralized, because it's transparent, and because it's all on the blockchain. So you're thinking about that and you think, so the ICO should follow that model. So it's up to us really to enforce it. I mean, you know, it's kind of, I agree it's not regulated, but it can very easily be self-regulated. So it's up to us, the actors, the investors, and the entrepreneurs to be as open as we can on what's going on.
It has to be self-regulated. I mean, ICO governance is a huge area. Because you know that there's going to be some, you know, whistleblower that comes out and says that this $20 million ICO, they basically just ran off with the money or spent it on sports cars or whatever, and the SEC is going to double down, or the European government is going to double down. And if it's 5 companies instead of 1, then it really is going to happen.
So what happens with, so let's say we're self-regulating and the ICOs are sharing all their information and sharing, doesn't matter, addresses of the whitelist or whatever. Will that limit how many, if there isn't a private sale, and there isn't a pre-sale, and there isn't a pre-private sale for the ICO, and there isn't a private pre-sale, are they going to be able to raise 100 million in 10 minutes? What do you think?
But here's,
I mean,
let's get some of the other panelists to speak.
Sorry, the securities tokens have like Sinus Blockchain and BCAP.
but yeah, so let's be clear. There's the pre-sale, which I don't think I've ever participated in. So. But the problem is that this exists in the angel world too, right? So I meet 2 entrepreneurs at a Y Combinator event, and I'm their first money in, I get a great deal. You come in right before the last venture round, you get a less good deal. This isn't a new phenomena. It's just a new mechanism for delivering that same equation of value for being early and betting on a team before they have anything.
But now, what Eddie just said is that if it's transparent,
right,
we should be trying to get rid of that sort of the I know that guy first, so I'm going to get more money than you, or I'm going to get a better deal.
It's less about first, and it's more about if I give them $150,000 when they don't have a white paper, because I think they're smart and brilliant, and he gives them $500,000 when they have a white paper, a prototype, you know, some users, and 500 people in their Telegram group. That's a very different situation, different risk profile.
I don't see a paradox between being transparent and doing a pre-sale. I think you can do a pre-sale and still raise, and I don't even see the relation between a pre-sale and the amount you're going to raise. I think if it's a good project, people believe in it. I mean, to be honest, it's a bit strange these days that you need to rush to an ICO in a way. I mean, why do you need to raise $20 million in 10 minutes? I mean, you know, if there is appetite out there, it's not a bad thing, of course, to compress it a little bit so that you have a secondary market. Everybody thinks about the token after the ICO, right? But at the same time, I don't really see the need for rushing. And as we saw, unfortunately, the need for rushing creates potential hacking. So I think security-wise, doing it in a bit more, a longer time lapse could be interesting on the security side.
I mean, we're still at the very beginning, even though, 2 billion have been raised by ICOs, 4 or 6 million crypto users in the world. That's nothing. Financial markets haven't woken up yet. So a lot of my former friends, they're in banking still, and they don't have a clue of what's going on. So congrats, by the way, for all of us sitting here and figuring this out. And I think in order for a lot of the institutional money to be pushed into ICOs or token raisings and any shapes or forms, things will have to mature a bit. And all of us here need to work together in order to get there, right? Some of our investing expertise will help teams out there to make their ICOs better and build better businesses. Some of you in the audience might do better investing as a result of what you heard during these last 2.5 days. So it's all of us. It's up to us to design it, and then the side benefit from it, which I hope all of us can harvest, will be the value shifts will be massive, and I look forward to that.
That'll be massive. We got 4.5 minutes left, so let's talk about something that we see a lot in social media. We see Floyd Mayweather, we see Paris Hilton, we see, soon we're going to see Jesus on people's decks. If Jesus coin probably exists. Pamir, what are you guys seeing? What are you thinking about this? I think everybody understands it. It really depends on the product and the people working on the product that are behind it. But this advisory world, what's going on over there? What are your thoughts on that?
So one of my favorite things to do is to meet an entrepreneur, look at their deck, and pick up my cell phone, because I have a massive Rolodex, and call the person in the meeting. And just by the act of picking up your phone and searching through and looking at their face, you can tell how well or how badly this call is going to go. But that said, I think it is a really important validating point that you can go and talk to people and get them to sign up and back your idea and support you as an entrepreneur. And I think in this business, more than any, we're giving people $20, $30 million. We need to give them the tools and the resources and the support to spend that money carefully, thoughtfully, and effectively. And so that, as advisors, that is our job. And if we're not doing our job, then that should be something we should be very transparent about, and we, the community, should enforce.
Okay, well, from my point of view, I think why we here? We are here because we want to find opportunity. We are looking for opportunity. We want to be a part of this revolution, because this is new, never ever been in the history. We faced like this in our history of modern times. So we are here for looking opportunity. There's a lots of solution. There's lots of innovation that will be developed in this industry.
Yeah, I was going to say, I advise a number of companies. I think I was actually asked to advise Jesus Coin once. But I think advisors do 2 or 3 incredible things. I mean, I think when I add the most value to an advisor is when I come in and I look at a model and say, this isn't quite right. If you flip this thing, it would really work, and then you see that it does. And all of a sudden it raises. And the other thing also is that, you look on the deck and you see, I referred Richard to a great company that we were working with at Transform that basically had actually done a great ICO in the advertising space, and they had nobody from the advertising industry on their board. And I was like, talk to him, and it's gone way up since.
Pamir, Adam?
So on the advisory stuff, so I'm going to throw a few stones in the lake, but I really dislike the... and I'm probably thinking too narrow-minded, but I really dislike the current trend of people assigning their name to various projects as advisors, because I recently read a book on financial bubbles. In fact, I forgot the title of the book. It was published in 1998. It's a nice history of financial bubbles through the last 2,000 years. And one of the recurring themes, or one of the recurring patterns in financial bubbles, is that the project promoters... Actually, there are 2 interesting patterns. One pattern is that there is a seminal project, which is very successful, and then you got a lot of promoters that say, look, at that project, it's been very successful. Mine is just like that, but with a little twist, right? So that's the first pattern. The second pattern is that a lot of the projects use well-known community members as a way to give their project credibility. And the reason I dislike it is because the real hard work in building these decentralized protocols will, it's going to take 5 to 10 years, right, to get anywhere, to get really big, get real usage. And that work will require, a lot of stamina, and it's a marathon, it's not a sprint. My feeling, and again, forgive me if I'm being too narrow-minded, but my feeling right now is that the advisory work is really focused around getting the ICO through the door, getting the project a little bit, sexified, if you like, and then it gets forgotten about. And that's the reason why I personally have not wanted to be involved as an advisor in any project so far, except for one where I'm an investor called Zen Protocol, but I don't even think my name's on the website, so I think I'm an unofficial advisor to Zen Protocol. So anyway, that's my 2 cents on that.
Okay, we got 15 seconds left before we switch. Adam, you got something to say?
No, I just think I agree with Pamir that I think celebrity endorsements are frightening, and I think that eventually when retail investors lose money, there will be a comeback on that, and I think people should be very careful about putting their name to projects without thinking very carefully about how they're going to support them.
Agreed. So time's up, but we're going to switch to the next speaker. So let's just do a soundbite. We got a coin market cap. The market cap is, let's say, 135 today, right? Plus minus. This time next year, when we're doing the World Blockchain Forum at the same construction site, what's the market cap going to be?
Next year in sunny Bethnal Green, I think the market cap will be 250.
You know, it's funny because at the Coin Summit conference in 2014, so the San Francisco one, we asked the investor panel the price of Bitcoin at the end in December 2014. So at the time, everyone predicted the price of Bitcoin would exceed $3,000 at the end of 2014, and there was consensus on the panel on that. So that's a sobering reminder of what may be ahead as well. But look, I think I don't really like taking a short-term view on these things anyway. I think over a 5 to 10 year period, I think we're going to comfortably exceed the $1 trillion mark, probably the $10 trillion mark. Over the next 12 months, I have no idea.
Either 75 billion or 400 billion.
I was going to say 25 or 100.
Trillion or billion or million?
Trillion. So 25 billion or 100 trillion?
I think that's going to be 500 million. We are going towards that path.
I think it's going to be at 27. SEC is going to put some people in jail. Things will pause for a moment and then pick up from there.
First of all, I find it interesting that in the world of cryptocurrencies, we still denominate everything in US dollars. So
That's exactly what I was looking for. That's a soundbite.
So how many Ether are we going to have a market cap, or how many Bitcoins? I think that's the most important question. In my prediction, I said 10 billion of new ICOs between now and the end of next year. It could be more because we're going to get thousands and thousands of ICOs. Pamir, I'm going to have my face in many places. But I think you would be a great advisor, by the way. So I hope to make you change your mind soon.
So maybe the better question is, how long will it take before we denominate everything in Bitcoin and Ether?
Exactly. I hope as soon as possible.
And I think the answer to a lot of these questions on what the price will be and what we're heading to and what are we heading towards are going to be best answered by our next speaker, coming from Syndicator. They predicting, and they've got great AI and hybrid intelligence predicting what the future prices will be. So I want to give a great round of applause to the panelists. Thank you so much.